Hey y'all, I know there was a couple people, good amount of people actually, a couple, dozens of people waiting in the waiting room. So just going to give it a quick minute while everyone comes on board and we'll get kicked off here in just a minute. Thanks so much for attending today. I think we got quorum and I know other people will come in here first. Elizabeth, do you want to kick us off with any comments?
No, if you have any concerns or you can't hear, just either feel free to raise your hand or drop it in the Q&A. I am here at webinars@enerex.com, so shoot me an email if you have any technical difficulties. And with that, I'll let the real professionals take it over.
No, Elizabeth, thanks so much for everything you do. Hi, Jason Beck, Enerex. If you don't know us, we're software as a service firm for retail energy. We work with both retail energy brokers and retail energy suppliers. My dear friend John Nijas and the DNVL team always puts forward the best and brightest reports and understanding of the competitive energy markets that our industry has to offer. So really privileged, John, that we get to share this time together and talk retail energy and this new report that you just released.
Thank you, Jason. Thank you, everyone, for joining and taking time out of your Tuesday afternoons to sit on this session. And what we're going to do today is cover some highlights and key data points from the competitive market landscape report that was published earlier this month. For a little background, my name is John Negus. I'm a senior consultant with the DNV competitive markets team. I work exclusively on covering activity in competitive markets. And so this is one of the reports that we publish throughout the year for our members. And we thought this is a perfect time to share some of the trends that we're picking up in the market right now. And so, hey, without further ado,
You just went on mute.
I would mute okay, here we go.
Without further
So
ado, yeah, we'll get into it. I just wanted to let people know that we'll be issuing some polls and sharing the results with everyone during this. So please keep an eye out for the polls. And if there's any questions, Q&A or chat, do not hesitate. We are watching it closely and we'll address them during the call. So John, take it away.
interactive session all the way through, exactly. So we'll start high level, looking at the total addressable market first on the non-residential side. You can see we've got it broken down into the 5 key regions that we're discussing. When we think of this as every eligible megawatt hour that's out there to be served by a competitive supplier, got about 930 terawatt hours out there across these 5 regions. We'll talk about this a little bit later, but just under 700 megawatt hours or terawatt hours, sorry, are currently served by a competitive supplier. That gives us about 75% market share served by the retail community. Only about 25% of that addressable market is still served by utility. So in that sense, really healthy dynamics and performance by competitive suppliers in the key markets that we're studying here. There's also been tremendous load growth over the last handful of years. We're going to key in and look at ERCOT right now because this is where the trend is the most extreme. Since 2020, you can see the market at that time was just about 180 terawatt hours. Fast forward to 2025, and we're at just over 255 terawatt hours in ERCOT. So that's a 75 terawatt hour increase, about 42% change over that time period. And one thing I think is notable about what's happening in the ERCOT market is the AEP Texas service territory. And over the 2020 to 24 time period, that market has grown by about 9 terawatt hours, which is notable because it's one of the smallest service territories in the state. Total volume in AEP Texas is about 29 terawatt hours. And so you can see 9 terawatt hour increase almost, more than 50% increase over that time. And, what's kind of, you match that up with the geography, that AEP service territories along that Gulf Coast region, and then you kind of transfer that more inland to the oil and gas production areas of the state. And so that's where really like large industrial booms taking place. We're seeing that translate into a ton more energy demand and kind of like outpacing the growth rate that you're seeing in the other big service territories, Encore and Centerpoint, which are still growing in a very healthy way. But in terms of percentage increases, AP Texas is really taken off.
And that's typically, you're seeing what, about 2 to 4% on a normal year for a normal utility in terms of regular load growth. You see a lot of this coming from AI data center demands in these territories.
I mean, we've all seen the crazy forecast out there that ERCOT is kind of playing with in terms of data center demand growth. So much of it is speculative. We're going to touch, I mean, hey, the data center piece is not going anywhere soon. So it's going to drive a ton more growth from here, but we haven't really picked that up in the data yet. So that's more of a forward-looking part of this equation. And
so you just see it continuing to grow then.
Yeah, I guess TBD as to how much of that's going to be, AEP Texas is going to benefit from that versus, Dallas Fort Worth area is one of the biggest data center hubs in the country as well. We might have to have another panel on just data center market activity.
Okay.
But okay, so now if we take a look at the residential market, again, we've got 4 key regions that we're studying here, about 41 million eligible customers to be served by a competitive supplier. This market is much, there's a lot lower rate of switching in the resi side. One thing that I like to call out in this chart is you can see in ERCOT, there are about 7.4 million meters. In New York ISO, there's about 7.2. So in terms of market size, very close from these two states. But we all know the regulatory conditions in ERCOT that make it so that all of those 7.5 million customers are served by a competitive supplier versus in New York, of those 7.2 million meters, you're looking at somewhere around 15% switching. So that's a great illustration of the way that the regulatory environment plays into this, plays into what we're seeing on this side. And now what we'll take a look at is the difference in average customer use across these regions. So I'm up here in Massachusetts, New York, and New England, ISOs average use about 7.1 megawatt hours per year. As you go to PJM and then ERCOT, you can see that average use increasing pretty substantially, so that by the time you get to ERCOT, looking at about between 13 and 14 megawatt hours per year, 46% more than what customers generally use in New England and New York, and kind of speaks to the way that the geographic location of the residential customer book can have a huge impact on the total volume served by competitive suppliers. So geography is super important in this market as well.
Yeah. So John, I know you're just giving highlights from this survey. Do you go into detail within your normal survey with each of these markets, break them down for your clients?
We do. We've got pretty detailed analysis at the ISO level showing market leaders, more detailed metrics on number of suppliers that are active, total number of megawatt hours and customers that are kind of served by utility versus competitive supply. So there are a lot of different ways we can slice the data from here.
Awesome. Very cool.
Okay, so that's setting the table. Now let's look at the non-res market. This is where so much of the action is. Over the since 2022, the market has increased by about 57 terawatt hours. So just in 3 years, 3 data points, we've got this really substantial load growth, and it speaks to the way that the market has rebounded from this low point that we got in, as a result of COVID. And what it says to me is that what we're measuring in a lot of ways is economic activity in the U.S. And you can see the upward trajectory that we're capturing here. And to the previous points you made, Jason, I don't see this slowing down at all. If anything, it's going to continue to increase. So, who's serving this load? Let's take a look at the market share of the top 5 suppliers. Of that nearly 700 terawatt hours, 66% of those are served by this top 5 group. Constellation being the largest supplier by volume in this in the non-res space with about 138 terawatt hours of volume. And we got our first poll up as well.
We do, yeah, John. I was just starting the poll about because you're starting to
Yeah.
talk about the top 5 and just understand, from our brokers that are on the call, how many relationships do they have with the top 5, and then also, how many beyond the top 5 do they have as you get into other statistics about them.
Yeah, so please help us, provide some feedback about how you see relationships and dynamics with these different kind of tiers of suppliers. And then this chart shows the distribution between the average book volume of one of those top 5 suppliers versus the rest of the market. So there are 100 suppliers that are active in this space right now. And when we think of the delta between this top 5 and the rest of the market, what it says to me is the comprehensive nature that these top 5 suppliers have within the market. They can serve the smallest matrix customer. They can serve the largest, most complex data center customer on the market as well. Versus when you get out of that top 5 and you start going down to the more niche suppliers, it's a much more selective process and customer base that they're kind of working with.
It's like 45 times the size is the average supplier. It's an amazing delta between the two. Appreciate you sharing that.
A ton of this has been driven by M&A. This pie chart that we had 4 years ago looks pretty different, and we'll touch on that a little bit more later. But the other thing that's really driving this growth is coming back to ERCOT, the total volume increase, the interconnection of new load. So it's not just the same customers being traded back and forth by suppliers. It is brand new load being introduced to the market in a way that there's not really a good historical precedent that we can call on for this. So we're in some
not within retail. We'd have to look to different industries to see that. When you start consolidating around a top 5, there's other things, other industries that I know have that. Oh, sorry, and thank you for the question. Answering this live, somebody, Karen, thank you for the question. You see 4 suppliers: Constellation, NG, Vistra, and NRG. The 5th is just a non-disclosure. We're not putting that in a box, but you can decide who that top 5 is. You likely know who it is. We're just honoring confidentiality requests. So thank you.
Yes, yeah, exactly. That's a good note. Thanks, Jason.
No, this is perfect. I think in the next slide we'll kind of continue to dive into these other suppliers and seeing some top load growth. Oh, and before we do, actually, let me end this poll real quick. Thank you for everybody who participated. I'm going to share the results here. Out of the top 5, 50% of the brokers on the call actually have all 5 of the top 5, with a scattering of the others. I think it's important to have some of the top 5 so you can see what price competitive looks like. Price competitiveness looks like, especially from the gentailers that are listed within that top 5. And then you see a very big scattering of 1 to 5, 6 to 10, all the other groupings. But the most, again, is in that more than 20 range. And so those are brokers that are working with a lot of different suppliers to see who is cost competitive in which areas. But I always find that interesting. Brokers how many suppliers do they work with. So there's a little bit of intel for the group.
You got to go fish where there's, you want to fish where the fish are, right?
Yeah,
That's how I think about
very true. And I know we'll continue to break this down. So
it.
we can next one.
So we talked about the top five. Now, this chart shows the little bit broader view, top 15 suppliers and some of the key movers and how this side of the market's evolved over the last few years. What we're going to do is highlight IGS, which is just in that top 10 bubble position. And they're notable because we all know them as a privately held supplier, really strong market presence in PJM, and they've grown their book organically in a lot of ways to this point. Have recently made an acquisition that's going to change the composition of their total volume, but highlighting them in this sense because they have just passed that 10 terawatt hour kind of ceiling or marker, and so always a positive sign when a supplier has the ability to break through that 10 terawatt hour kind of glass ceiling and kind of move into this new category. So again, there's been quite a bit of movement over the last few years, largely driven by M&A, and IGS has had a really interesting combination, organic growth and acquisition in recent years.
So, I have a polling question now for the brokers in the
Oh,
call
yeah.
again. And thank you for those that are looking at it and answering it. And while we do, just curious, John, of your thoughts here. So, there's a lot of consolidation around these top five suppliers. We said 66% market share, but you highlight Smartest Energy on the bottom left. And
Yeah.
for what it's worth, and I'm sorry, but they're the bottom one on your chart and graph too. And you see that they've had some good load growth as well, and that's organic. And I'm curious, like, how do you see these suppliers trying to stay relevant that are not within the top five and are buying other suppliers? Are they doing it with like different types of contracts, different types of products, DER offerings? What do you see? How does somebody stay relevant as a supplier that's not within the top five?
I think a lot of it comes down to really solid execution around blocking and tackling pieces of delivering an energy supply contract. And this is a relationship business, Jason. I mean, you and I, it's so personal in a lot of ways. And I think the suppliers that have, that are more like newer to the industry and have built this book organically, have done it through really solid execution and building the personal relationships with the kind of target channels that they've selected. So I mean, Smartest Energy is interesting because they're 100% indirect, right? They're strictly through broker channels. IGS has this much more high touch, kind of personal presence within their markets model, and they both work.
Yeah, no, in fact, IGS historically not working with many brokers, and with their recent acquisition of JE, which I know we'll break down later, but that includes the Hudson Connects, Hudson platform, Hudson in general. Kevin, and that's huge, right? It's the company now that has historically not interfaced with a lot of brokers, is acquired a company that was notorious for breaking ground in how retail suppliers served brokers with Hudson Connects. And now we're 10 years later and nobody wants to deal with anybody's portal. They just want to work with their own CRM. But and I can sure we can break this down further, but this is kind of where I see, it's very interesting who's acquiring who, because they're trying to get into channels that they don't otherwise get into. And they see a balanced approach across direct and indirect sales as being the best way to go about getting business and continuing their growth.
It's kind of like two options to grow. You either grow geographically or you grow through different channels. And IGS kind of taking a swing on both right there.
Amen to that. I'll end this poll before we go to the next slide. And continue to share some results here. We asked this question about, in the past year, have you shifted more business to the larger suppliers, the top five, or diversified to the rest of the world? And, you see actually a really strong balance across some, quarter of the population moving to the top five, a quarter kind of moving it to the rest of the suppliers to diversify more. I don't think either one is a right approach. It's just kind of curious as to what's going on out there, and staying roughly the same, being the majority of folks. So again, appreciate everybody. We figured a spattering of different answers, but it's appreciative to see what folks are doing out there. Thanks for participating.
I mean, not to I guess jump too far ahead here, but leading into the sales strategies research, we've got some really interesting questions on relationships between existing channel managers and, what would it, kind of, what's the tolerance for staying with a channel manager if they were to change jobs versus, sticking with the company. And I think we're picking up some of those dynamics as well.
Absolutely.
Okay.
Let's
Jumping
run
over to
through
the
those.
resi side. This market is categorized in a huge way by activity in aggregation customer contracts. And you can see the general power stats, number of competitively served power customers, been between about 11 million and 11.8 over the last 3-year stretch, versus the aggregation customer contracts going from about 2.3 million up to 4.3. So we've got 2 million customer increase just in that aggregation market. And that's where a lot of that's like the new market opportunity that I think is being presented in the resi space. Breaking down who's serving these customers. We've got our top 5 distribution again. The resi market's even tighter than we saw on the non-res side. So top 5 suppliers serving 73% of the switch customers. And if
And the
you take that
top
a
two
step,
are sharing more than 50% is what that's showing too,
that's
right?
exactly right. That's exactly
Wow.
right. So yeah, NRG and Vistra, the two kind of dominant players from with ERCOT kind of background, really staking this leadership position in the resi space.
And then
Um,
IGS, I see there as well, and so that's with the acquisition of JE, correct? Because I know
no,
JE,
that's not even counted yet. JE's
that's
not
not even
even
counted
built in
here.
there.
Wow, man, that's really IGS will be a solid third. JE has a fairly decent size residential book as well, so very cool.
And it ties back into what we were saying earlier of the geographic distribution of the residential customers, how 7.4 million in ERCOT, all served by competitive supply. Translate that back to those NRG and Vistra books where they are uh, the dominant players in the market.
It's this, yeah,
Makes a lot of sense.
absolutely.
Okay, and then if we look at the aggregation market, so this is this is basically what's happening outside of ERCOT. And so much of the aggregation market is defined by Ohio, Illinois. I'm up here in Massachusetts. I believe I'm a Vistra customer myself through a aggregation program in my town sign not too long ago.
Hope it was at a good price, man.
Way better than National Grid it's
There
given
you
me.
go.
So there you go. And so then when you take a look at this aggregation market distribution, Vistra in this case, by far the leader in this category, followed by Jexa. They've got a really big footprint in that Ohio market, and then NRG and Constellation, really active again in the Northeast. So, this aggregation market is kind of what they've created as an opportunity for competitive suppliers to continue to be active in the tight markets in the Northeast. We talked about New York earlier. Everyone knows the situation in Massachusetts, always kind of kind of on a knife edge right now. So, notable though that through these aggregation contracts, there's still a huge amount of customers being served. And the notable change recently is that New Hampshire has opened the market up for aggregation contracts, and they're between 150 and 200,000 residential customers now served in New Hampshire that that were unlocked by uh, by that type of regulation.
TCAs, yeah, absolutely. Very cool.
So now when we look at the top 15 suppliers, keying in on Vistra in this moment because the acquisition of Energy Harbor is completed, I guess, late last year, is the thing that really uh, pushed them into that second position, increased their total customer count by about 1.5 million. It's not all attributed to the Energy Harbor customer count, but it's a large part of it. And there were a ton of aggregation contracts that were part of that deal. So again, just another kind of note in the way that M&A has impacted the resi side of the market. And again, the aggregation piece of it has driven this in a big way. So
Yeah, I've seen Constellation seems like has had a loss in load growth around that. Probably some municipal aggregations that they may have lost to an Energy Harbor or something. I have to imagine within that.
yeah, when you see these big chunks of customers moving, a lot of
That's
times
usually what it is.
uh, that's kind of
That's
the
yeah, that's
root
the
cause of it. Yeah.
in the resi space for sure. Such great insight, man. Excited to jump into more about the M&A world because I know it's so important for everybody.
M&A is coming up right here. So if we look at it from just the non-res standpoint, I thought it'd be interesting to look at some of the biggest transactions over the last 5 years. So starting with the NRG acquisition of Direct Energy, this was in 2020. This kind of resulted in a 75 terawatt hour jump year over year in the NRG reporting book. They went from the seventh largest non-res supplier to the second, and transaction price about 3.6 billion. This was all cash. There were quite a few residential contracts as well under all the Direct Energy brands. So that was the biggest deal that we had ever seen in retail energy at the time. Uh, then we had the Vistra acquisition of Energy Harbor. This had the kind of year over year change in non-res volume was about 21 terawatt hours in this most recent cycle. So about 36% increase. They went from the fifth position up to fourth. And it's about 3.4 billion. This was cash and equity. And then included about 1 million resi customers. Notable piece on this Vistra acquisition was 4 gigs of nuclear generation in PJM. And that's a piece that's becoming more and more important in the market, especially, I mean, tie it into the data center conversation, tie it into the PJM capacity situation, and having that firm capacity is a kind of different value calculation now.
Yeah, it's where Gen Tailors win at the end of the day because they're hedged naturally against, if you're just a long customer book as a retailer and, you're just serving customers but have no generation, when the PJM capacity rates go up to what they just did, again, for 26, 20, 25, 26, and then 26, 27, even higher, if you're making money on the other side of your generation business, not as big of a deal. But if you are not, and you're just passing that along to customers, I have to assume that's a bigger hit for somebody who's not a gentailer, right?
Yeah, very different value props and calculations that you're making on that side of things. So last one we'll talk about on this side is IGS acquiring Just Energy. This deal was just announced earlier this year, so still some things to be finalized in this sense. But if we were to take our metrics from the landscape report, we'd be expecting about 7.5 terawatt hour increase for IGS, which is call it a 72% jump from where their current volume is. This will move them into the top 10 suppliers by total volume. And, we touched on this earlier, but changes their geographic footprint, gets them into ERCOT in a way that they have not been active to this point.
Historically,
And
PJM focused, Ohio, right? Based
yeah,
IGS. Yeah.
Yeah, and so IGS really, making some noise in the M&A space in the
John,
States.
just before we move
Yeah,
on
we
to
got
the
one
next
more.
slide, I just wanted to, obviously there's the Constellation Calpine one. I know we talked about it on our prep call, and that's a big one too. Just can't fit everything on a slide, right?
Yeah, it's
Which
coming
also
next. It's coming next.
awesome. Before we move on though, I'm just kind of curious, how do you see, what do you see through this market consolidation? We have other industries we can look at that have done consolidation. Like, what do you see happening with prices, customer choice, innovation? As things start, tightening up around just top five suppliers.
I mean, I see this as innovation needs to be well capitalized. And so to make these jumps and make this transition that we're talking about of uh, more complex customer contracts, more devices in customer homes, more sophisticated metering at customer sites, uh, accomplishing those goals requires going back to it, requires a firm to be well capitalized and be able to uh, make these moves at scale that can be felt across the entire portfolio. So I see this type of consolidation as enabling a lot more innovation, um, and I don't see prices being inflated by the consolidation. There's still enough competition, especially in this non-res space, that um, there isn't going to be any runaway kind of pricing scenario that we run
Yeah.
into.
When you still have five different, disparate and well-balanced books of business, they're still going to be competing against each other to continue to jockey of those top five positions. I agree with you on the price standpoint. I would just share that, like, I and I'm not the expert, just a humble Jason Beck here in Enerex. From our vantage point, though, and the fact that we get to work with a lot of these mid-sized retailers that might not be gen tailors, might not have the top five book of business, but they're super nimble. And
Hmm.
where they're having a lot of effect is in serving their partners better, because 85% of this business is still served by these retail energy brokers out there. And so nimble in serving them, that's how I see people like Smartest for instance, kind of winning, because they're just focusing on their niche and serving it better. So yeah, I hope folks continue to do that.
It comes back. Hey, the role of the broker market is maybe more important than ever when there is this type of consolidation, and a customer is relying on the input and analysis of one of their broker partners to help guide them through this environment as it's changing right now. So I think that's a very good point. Um, so this is the kind of non-res impact of some of the M&A that we've seen. A few other deals that we've been tracking just more recently. So on the generation side, mentioned the Gentel acquisitions. First one, Vistra, acquiring 7 gas turbines or gas plants, just under $2 billion valuation and 2.6 gigs of capacity there. Follow that up with an NRG acquisition of in 2 deals, LS Power and Rockland Capital. Total kind of nets out to about 13.7 gigs and between 12 and 13 billion in transaction price. And then I mean the largest deal we talked about, the largest deals in competitive energy, Constellation acquisition of Calpine is on a scale that we've breaks the model of anything we've seen
Yeah.
before.
I would,
26, in between 26 and 27 billion. Um,
wow.
Huge non-res book, pretty substantial residential customer book, and almost 30 gigs of generation, uh, natural gas and geothermal across the entire country.
And while the customer books I know are valuable, the real moving the needle on these billions, the B's instead of the M's for
Yeah,
billions, is around this generation. I think one thing to call out too, though, and you have it in the slide, is that through NRG's acquisitions here, they also the 6 gigawatt VPP platform would
yeah,
be C Power, right?
exactly right, exactly right. And I'm so interested to see how that demand response portfolio and product line plays into customer decision making in this coming cycle. So
100%. I'm a big fan of VPPs. Happy to go through it a little bit more. Before we move on to the I think the broker side of acquisitions, we got a great another live question. Thanks so much for the audience for
yeah,
continuing to participate. So the question is in a market where there's clear distinction between the Northeast and ERCOT, which direction of M&A activity is more prominent, from the Northeast into ERCOT or from ERCOT into the Northeast? Um, I'll let you take a second to answer, and I'm happy to chime in.
wait, sorry, was that a question from me or is that the poll?
Yeah, no. This is for you and I, for that matter. Just for the M&A activity, do you see more people that are in the Northeast trying to acquire into ERCOT, which would have been the IGS acquiring JE, which picked up a good Texas book, or is it more
Yeah,
so, an NRG acquiring, different companies, including Direct, back in the day, which was a Texas buying a Northeast book.
I mean, the real action in this market is PJM and ERCOT.
That's
The
right.
Northeast is like you need to you need to be active and you need to play in the Northeast, but you could win all the volume in ISO New England, and if
Not
you're
make
not
it back.
active in ERCOT, you're not going to break. It's the scale is kind of uh, doesn't lend itself to kind of isolation just in the Northeast. So you got to be everywhere if you want to be in
In that top five
the top
conversation.
tier.
Yeah,
Yeah,
you got to be
exactly.
in both of those markets. That's great. Great question, Ken. Thanks so much. I'll
Um,
end the poll as you get on to the broker side of things here. We
yeah.
had asked the folks on the call if this recent M&A activity has affected your business positively, negatively, or not at all. And um, I'm loving these bell curves that we're
Yeah.
producing. It's like, pure bell curves. It feels very math back in eighth grade.
Yeah.
But it makes sense. I mean, it's a lot of this activity can be overlooked to some extent, but you do have folks that 25% of folks that have been affected one way or another negatively, and 25% that positively, and 50% kind of neutral. So there are impacts of M&A. If you're not staying up to date, if you're not on a great platform that has access to different suppliers and understands the different markets, it's going to be tough to compete in these in a consolidating world. So I urge all brokers out there to continue to focus on, if you can't be acquiring other folks, and if you're not looking to get acquired, then you just need to have really good partners out there.
Yeah, that is encouraging to see that you know, I, it's easy to think of M&A as disruptive, but to the broker market and the audience that we have on the session right now, it's maybe a sense that everyone's used to this. Everyone's used to rolling with these kind of punches at this point. Um, a quick rundown of activity on the broker side. There are, a dozen other transactions that we could have covered on this side, but just notable that USource really active, acquiring 3 broker books in the last 12 months or so. Environment Energy picking up two broker books, mostly located in ERCOT, and then AppDirect with the acquisition of Broker Online Exchange. That box platform is like kind of a little bit more ubiquitous across all competitive markets and a bit more of the digital play as opposed to the traditional energy broker services, I think. But Jason, anything you speak to more on this? The broker acquisition cycle that we're in right now.
I mean, this is the most broker acquisition I have seen over my decade on this side of the business, and then definitely on the 20 years in the business, 10 years in the supplier side. We've been seeing it increase. I've heard so many years post-pandemic where we're like, it's gonna break. There's gonna be a lot of activity. And I always used to be on these webinars saying that, yeah, but the buy side wants to buy it like cents on the dollar and the sell side wants to sell at like 1.2 evaluation, and there just was a big difference. And I think those have consolidated I've heard of new models that are EBITDA driven, which, again, for a retail energy broker, it's like, I have a future book of revenue. Shouldn't I get valued on that? Yes, but I also think that you have a business, and that business is fairly profitable at the end of the day with not a lot of overhead. And so, these different models that are emerging around EBITDA valuations, they make a lot of sense to me, and that's why I think you see more of these deals getting done. But John, I'll pose it back to you because you're watching all these M&As, really carefully while the poll is still out there for, understanding what folks are doing with M&A activity. So please answer while you can. But while they're answering, John, I'm curious if you see that, like, are these broker acquisitions happening because they want more products, or they want more services, or are they just like consolidating broker books so that they can sell more products to more customers? Like, what do you see as the reasoning, or why this
It feels like
consolidation
scale.
happening?
It feels like a scale, a movement towards scale. And I think some additional sophistication is going to come along with that. I mean, we're going to talk about this a little bit later too, but we're at the kind of inflection point where there's going to be a lot more AI driven analytics around this entire contracting process, the entire customer acquisition process. There's going to be a lot more um, uh, active customer analysis throughout the life of the contract. And so those kind of additional levers that need to be pulled are going to be better served by, again, uh, firms that are well capitalized and have the kind of intuitive DNA to innovate and push these, new ways of looking at the data. I mean, think of how much data we're sitting on with each one of these customer profiles that can be mined and analyzed and repurposed for additional uses. So
So true, man. Well said. And
that's
I agree with that AI comment too. Shameless plug here. At NRX with our broker platform Sparkplug, we're starting to release a lot of tools for our retail energy brokers that are AI driven. AI matrix pricing analysis, and understanding different price points, and then we're turning that around for the retailers. And doing the same thing in an anonymized fashion, so different suppliers aren't seeing different suppliers' pricing, but really forecasting. We've noticed that in certain markets, there's certain suppliers that are like 6 mils under everybody else, and it's like, you don't have to be six; you can just be 1 mil under
yeah,
everybody else and win the same amount of business, and
yeah,
vice versa. If you're 8 to 12 mils higher than everybody else, it's important to understand why that is. And with AI, and the advent of these tools, this is the analysis part has become so much easier, and so we're really excited about what we're pushing forward in that realm. And I back to your point, I think that's how people stay relevant on the broker or the supplier side. It's with data, it's with good partners that are focused on giving clean data and receiving clean data, and then using AI to forecast.
I think the analysis gets a lot easier. What you do with the analysis is the thing that's where we differentiate, right? That's
Very
where
true.
we're gonna see the separation. Um, okay, so last piece of
Well,
content from
before you move on, if you don't mind, John, so
oh
sorry to
yeah,
interrupt you, but let me just end this poll real quick just to share some more
okay.
results for folks on the M&A intention, because this slide that's on your screen is one of my favorite. But just sharing that, asking people, are you buying, are you selling, are you not doing anything? And good portion of the market, 63% are going to be staying put, but you see that a third of the market is actively buying or selling. It's a lot. It's a huge activity, right? It's typically 10-15% probably is looking, but that's a lot of folks that are actively out there, shopping for a book, or maybe selling their book. So I think this is just the start of M&A activity. I don't see it slowing down anytime soon. So again, keep up with market experts, John. We have some stuff here at Enerex too that we've been helping brokers on as well with their books. So, and getting it clean so that they have the ability to get it valuated. So looking forward to continued activity around the M&A front. But now I'll kind of turn this back towards this this chart that you have
That's
on
what
your
you're saying.
screen, man. What's
I mean,
this
hey, if
telling
you're out
us?
there selling, make sure you're getting a fair price. And if you're buying, make sure you're paying the right, you're paying the right number.
Yes, sir.
Um, okay, so this is the final slide that we'll touch on from the landscape report. And this shows our forecast of non-res contracts that are currently booked out. So we take the current market size and apply kind of estimates to show how much of the future market in 2026 through 2032 is already booked and already under contract. So the it's something that we all feel, I think, already in the market. But when you're out there looking for new customers and trying to identify start date times and uh, like when does it make sense for this load to show up and when are these customers going to be available again, about 60% of the market next year is already booked. So if you start looking out to 27, 28, you've got a lot better kind of field to play with, and a lot more of the market is kind of up for grabs at that point. But this goes into our conversations about blend and extend renewals. How early in the cycle can you start having those conversations? How early can you lock up your existing customer book? And how aggressive should you be in pricing out deals that are going to have start dates several years into the future? So
Yeah, this is such an amazing slide. I really appreciate you sharing this with the audience because, when we look at what's going on, and this is just, I try to be as much as valuable as I possibly can be to our audience here at Enerex, right? Understanding different trends and what's going on outside of retail energy, as well. And you have a huge group of large corporates that are really pushing sustainability, renewable energy buying, like through their supply chains. And just again, sharing whether it's wanted or not, I'm going to share anyway. Uh, I've been
fire away.
tracking things like SBTI, GHG protocols, which both have revisions coming out in 2027, forcing really a forcing function because there's so many companies that follow those protocols to buy more renewable energy. And then you have on the other side of this, you have the OBBA Act, this one big beautiful bill.
Yeah.
And that's basically pushing all the generation to get online by 2027. So now there's going to be this big gap in 28 and 29 where there's not going to be as much generation coming online, but yet the customers are going to want a lot more energy and renewable energy at that. So I know I'm going back to my economics 101, supply hampering and maybe coming down, and then demand going up. Where's prices going? And it's just like what concerns me most and what stood out so much from this slide is like 2028 is going to be that year where prices start getting nuts, like crazy, crazy. Again, assuming everything plays out like we see it playing out right now. And only 18% of the book is locked in. That means 80% still needs to be locked up, and these prices are likely going to be higher. So, getting ahead of that and messaging it and using the tools available to you on platforms, I think is so important for the broker and the supplier community that's on this call that are serving those brokers, right? They getting active and getting proactive with this renewals and educating your customers. Given this slide, I think is, man, table stakes at this point.
We can see where this is going, and it's up to us, right, to be able to communicate this effectively to the customer base, to the again the people who are in the trenches of this market in a way that I get to sit here and look at the numbers and create the charts and say these nice stats about things, but there are real decisions being made every day around exactly this type of data.
Absolutely.
So thank you for the let me run down that the highlights from the landscape report. Let me jump for these last couple minutes into one of the highlights from our sales strategies research that we published last year. So I picked out this slide because we asked ABC, the broker community last year, which product do you think has the highest growth potential? Demand response is the thing that jumps out is on the top of this list. I am very interested to see how this chart looks after this next cycle of research, and if demand response is uh, if it stays the same, then I'll be surprised, because I'm
Yeah.
expecting it to get to kind of jump to the top in a bigger way.
Yeah, with PJM continuing to go up, does that stay ahead, or are more people looking in the behind the meter solutions with, costs continuing to rise and thinking about long-term supply? That'll be very interesting.
Now we talk about the communication channels that are the most common way that retailers and brokers communicate with each other. Digital platforms was highlighted by 24% of brokers as their preferred channel. This is the one again where we keep coming back to trying to understand what's going to break through in this market, and is there a centralized platform that's going to win out at the end of the day, or are we going to end up with individual portal systems for each supply? What does the digital platform market look like just a few years from now, once once the kind of 60% email preference is not as prevalent, I guess, as we're expecting it to be. So
Yeah, John, I first off, I just share, like, 8 years into this Enerex business for myself, and 15 years for our co-founder Nate Richards. And I remember when this chart email was like 80-90%. So I'm glad that
right,
we're making
right,
some inroads, with what we're doing at Enerex and other, platforms out there that are trying to communicate more digitally. But this idea of a centralized platform is something that's so near and dear to my heart, and something that I've been very passionate about from coming outside of the supplier world, is that Enerex is not a platform company when it comes to using our UI UX. You can use our UI UX products, but there's so many suppliers and brokers who have built their own digital platform, but they can prefer that as the way to communicate, right? Imagine that you
right,
don't have to have
right,
all this data transfer, and you can really start to focus on why a deal should be qualifying for demand response, or some other type of product, and not doing the busy work. And so, just sharing that I do believe digital platforms will continue to grow, specifically with a single hub and spoke model, where brokers and suppliers that use their own user interfaces, their own CRMs, can hook up through Exchange, Enerex's platform, so that they can communicate to the other side. And with the 70, you mentioned about 700 terawatt hours of total served load.
yeah,
The brokers that are on Sparkplug account for over 10% of all of that. So they're the ones driving this at the end of the day. We're just a platform provider, but I do see digital platforms continuing to increase, and very excited to see what that number looks like this coming year, hopefully increasing.
yes. And okay, so the last thing on here is some content from the customer survey that we ran as well. We asked the CNI customers, what is the product that you intend to purchase over the next 12 months? HVAC and lighting is the top response here. It makes sense as to, hey, this is my building. This ties in directly with our everyday operations. The 24/7 and renewable energy piece was the second most common answer. This is the one that I'm looking at is, how does this number change in our next cycle of research? And are there things further down the list, like behind the meter generation, that may kind of move up the stack in the customer's mind?
Yeah, and John, I know that we're getting into, this is last year's survey, and we're going to be
Yeah.
telling the brokers here about what's coming up next. One suggestion that just popped into my mind real time is breaking that box down in between 24/7 load matching and
Mm,
then also renewable load matching. And I say that because SBTI and GHG protocols specifically, as I was mentioning before, have a lot of carve outs, and there's some heated debate
yeah.
that I'm
Yeah.
part of, but also others that are part of this about, is 24/7 really needed right now? Is that's what's needed with renewable energy? So super curious of, what folks in that bucket are looking at 24/7 matching versus just standard renewable energy, REC, PPA, VPPA type of procurements as well. So excited about that in the next survey too.
A ton of stratification in that renewable product category as well. So, there we could create half a dozen a list of half a dozen products that feed off of that as well. So um, anyway, that's just another indication of how the market's getting more sophisticated. Okay, the last slide to share is an invitation for everyone on the session today to participate in the next cycle of sales strategies research that we have coming up. So the Voice of the Channel Partner Survey is designed specifically for brokers. Any brokers on the call, you're going to start seeing emails from me, either from my personal email at DNV or from retail.market at DNV, saying, hey, can you please take our market survey this year? This is how we get the data. This is how we get the feedback that suppliers use to make decisions on their channel partner activity every single year. And the big announcement that we have is that we're offering incentives this year, $100 if you can submit your response by August 15th. And it's going to decline from there. So the earlier you get your response in, the bigger the incentive that you're going to receive. Surveys will be launched tomorrow. So if you don't see one, just ping me and I'll make sure you get it.
That's right. And John, we're not going to be shy of it here at Enerex. We love this relationship and partnership. We'll be sending this out. So please, those brokers on the call that are listening, get that $100, fill it out, come in, come fill it out over the next 2 weeks while things are still kind of getting back rolling from our summer breaks. We'll be sending out some stuff from Enerex, as far as reminders are concerned. But yeah, I'll ask for the upfront. Can we get you back and talk about these results towards the end of the year here in the October-November range and kind of share what the Voice of the Channel Partner Survey at a high level is too?
Oh, absolutely. It's a tradition like no other. to borrow phrase from Jim Nance. I mean, we've got to bring back the sales strategies webinar again.
Yeah, no, it's been amazing. Awesome. Can't wait, man. I've really enjoyed kind of going through these with you. I think it's such topical information, and especially with all this M&A activity. Brokers, it's your voice that we want to hear from in this next part of this survey. So looking forward to this continued relationship. And John, Khadija as well. Khadija's on the call. Khadija is John's right hand in all this surveying and what DNV does. So special thanks to Khadija and John for joining us today and sharing this with the audience. John, any final words from you?
We'll be in Chicago next week. TIPA event. Shannon set up an awesome agenda. I mean, she never disappoints. And so, yeah, look for me, Jason. Nate's going to be there as well, I think.
Yeah.
So.
Yeah. Shout out to TIPA. Yeah, absolutely. For Chicago is next week. So if you're in Chicago and haven't registered yet, please do. And we'll see you out at that one. Also, lastly, thank you very much to Elizabeth built in on our side at Enerex for putting all of these polls together. It's an awesome relationship. We look forward to more of these attendees. Thank you for being there as well. John and Khadijah's information is on the screen, and we'll make sure to send this out in our recap of this event as well. So thanks, and have a great day, everybody.
Thanks very much.
Thanks, John.